If you're in the real estate game and you're having trouble underwriting deals, finding markets to look at, you want to do a better job helping your clients find areas that have high returns, cash on cash, return on investment, cash flow, or you yourself, you're an investor and you're looking for these areas and you're wanting to quickly underwrite, 20 to 50 deals, in a few hours and then send that off to your agent, get some deals made, start really buying some properties, then I have a tool for you. Watch. It is called Heatmap Housing. We just released this last week, but yeah, let me get to it. So this is an entire nationwide heat map color-coded by our metric, which is cash flow at the moment. You've got, green zip codes mean it's cash flowing, red means it's not. And so if you wanted to, this is a filter. There's a huge amount of filters for this level. You can say, hey, I've got $150,000. I want to only look, well, we'll keep it on there, but I only want to look for houses that the median sale price has been $200,000. So this updates the entire map. You can see how quick and responsive this is. And this really helps you narrow down, hey, there's some cash flowing assets in these areas that you can dig into. So let's say I'm interested in this zip here. So I click on it. It opens the zip detail sidebar, right? So you've got some KPIs here: deal score, area grade, growth potential. This is going to be your overall deal score of cash flow, appreciation, liquidity, risk, value. You've got your area grade, which is going to have some demographics for income, population, bachelors, different things like that. You've got your growth potential, which is keeping tabs on if this area is growing. And so it gives you kind of a little hint here: strong appreciation momentum in a C grade area. So that'd probably not be a terrible area to invest, but once you keep going down, you've got, how many homes have been sold in the last 6 months. You've got not a lot of condos in this area, but we can quickly, change this and see what the different cash flow and returns would be on each of these bedroom counts. And you've got this bedroom comparison. Looks like, you make your money at studios and 3 bedrooms, not necessarily 2 and 4 bedroom. You can tell where price drops are, the month of supply, if it's competitive. But yeah, let's say we like this zip and we want to drill down into it. So these property markers, this is everything that's on the market right now. We've got our current preferences are set to target $250 a month. And so because I have that set, this is automatically grading and saying, hey, everything that's green, this is a good deal. Everything that's yellow is close to or maybe a little bit below what we have our cash flow set to, and red means it's not really going to match. So let's say I'm looking at this $125,000 house. You've got beds, baths, square feet, lot size, age, and we are targeting $250 a month in cash flow, right? So that means this is our max offer. Our max offer needs to be $122,000, or we're not going to get that. If we just wanted to break even, we could go up to $169,000 if you're just looking to have an asset that's not going to actually be cash flowing. If you wanted $500, this house is actually only worth $75,000. So this property detail here kind of gives you some quick metrics of your expenses, vacancy, property management, maintenance, CapEx, whatever. That's all great. Your DSCR, your cash on cash cap rate. You can get your property data for who owns it, if it's owner occupied, when it was last sold, tax history, sales history, pulling comps right here. So comps were based on single family, 3-bed, 1-bath, 1,200 square feet within 2 miles. These are all 1,200 square feet. They're all actually less than a mile. This is the age of the listing. You can see we're in the ballpark here. But let's say you didn't trust all these metrics and you wanted to look at it a little deeper. That's where this deal analyzer comes in. So once you open this deal analyzer, what's really cool about this is that we have these confidence, and we basically have a priority rent estimate. So this is actually and confidence label here. So if the user has input something, we take it as a high confidence. If we're getting it from our third party evaluation model, it's medium high. If we're getting the market estimate, it gets medium confidence. And so this is very open and tells you for every single input, for financing, for expenses, for whatever, it's telling you what all the confidence labels are. And then you can go in and manually edit all those, and it will give you the underwritten deal. And if, for example, you were interested in voucher tenants, which is, the HUD payment standard would be $1,950, which is significantly more, but that includes, your utilities and everything. But if you open up this rent market data table, you'd be able to see and kind of get a market analysis of here's what, the government's paying you to have this type of house. So what would be the most profitable for you? Well, that'd probably be a 3-bed right there. But and then we're also capturing market by bedroom. We're capturing market by unit type, the overall median, price per square foot, and it's coming up with a metric. Now it has HUD selected because we selected HUD as our metric there. But once we change it to market, it's back down to 1,400. So this is a really powerful tool. You can also use it to model if you wanted to put an addition, bathrooms, bedrooms, add square feet, and all these metrics are changing as you're, as you're making these adjustments. It's changing your offer, and so it's nice there. If you're a BRRRR investor, we've got BRRRR calculators, which essentially show you like, hey, is this going to be a good? Can't even find my own calculator right now, but. Okay, so the BRRRR exit right here. So it's giving you an ARV. It's telling you, hey, is this a clean BRRRR? Is it partial? It's a partial because you're making good cash. You're making positive cash flow off of it, but you still have cash left in the game, right? And so even having $769 still left in it's pretty good, but it's not a clean BRRRR. Let's say I wanted to essentially save this to my pipeline. I'm going to save this, and I'm going to go to my pipelines. I've got planned example open, and here's a house I was looking at earlier, but we've added this one. If you saved a house, it would go to this tracking. And let's say you save 50 houses, they're all in tracking. And you want to go through, open the workbench, save the analysis. This one's already saved and analyzing because we had already done that. But, let's say you spend an hour, you pick out 50 deals, you put them all in tracking, and you go ahead and go through the process of underwriting, and then you just move them along. You're ready to offer. That's cool. Let's go ahead. Let's hit export this out and send it to your agent. Let's go make 50 offers today. And, maybe we'll try it again next week. See what happens. So overall, zip to property, to underwriting, to offer, all in one platform. That's Heatmap Housing. My name's Landon Mickelberry, and this is Heatmap Housing. If you guys enjoyed it, feel free to go to heatmaphousing.com, check out our free tier. There's a lot of cool features available. Thanks.